Yeah, hi. Good evening, everyone. Welcome to Research and Ranking Budget Review Session. Thank you, all of you, for joining us today evening and giving us your valuable time. The Over the next hour and a half, we would be sharing with you, what our sense of the budget was. It'll be a quick summary of all our individual analysts. We have all the sectoral analysts present right here. Post that, we'll open the house for Q&A, and feel free to ask any questions around the budget. A few ground rules would like to set up front. We would not be able to accommodate any stock specific questions. So kindly resist asking us what is our view on stock A or stock B. Second, the related to that is, we are SEBI registered body, and SEBI says that everything what we recommend to our clients has to be basis risk profiling, which means a certain client could be low, could be medium, could be high. Therefore, a stock A could be low risk for someone, a medium risk to another, and a high risk to the third one. So that's the reason we would not be able to comment specifically. So I welcome. My name is Jaspreet Singh Arora. I am the CIO at Research and Ranking. I am accompanied by my analyst Franklin on my left. Next to him is Yash. Next to Yash is Tanvi. On my right is Kimberly, and to her right is Lisa. So this is the esteemed panel we have set up for you live today to help you understand any nuances or any questions that you would have around the budget. So let me with that, and we have our clients, we have our a lot of people who've been there on YouTube following us. Thank you so much for watching all our videos, and we have a lot of people who have registered separately, so we welcome everyone. With that, let me just start. So budget 2022, according to etc. While the new India could be represented by the focus or the allocations or the impetus given to areas like optical fiber, the EV battery, the solar, fintech, 5G, crypto regulations, the digital rupee startup, and extending all possible help to the next gen as we define it. Moving ahead, some of the salient features that I would say around the budget was, number one, the capex target. So there are two areas on which the government predominantly spends. One is around the capex, and the one is around the revenue expenditure. Revenue expenditure are for simplicity is the area where you would spend on a daily basis, right? And it's more it's more like a P&L thing where you spend more from a maintenance stroke consumption area, right? While capital expenditure stroke capex is more from a gross fixed asset formation side, which has far more repelling effects, in the sense it promotes more employment and has a multiplier effect on the economy. With this, I think clearly the government's focus was more on capex, because as I said, it has a far repelling effect versus on the revenue side of it. So capex clearly saw a 35.4% jump from 5.5 lakh crore to 7.5 lakh crore. This is the BE of 22 when compared with the BE of FY23. When I look at the disinvestment targets this year, it's again being realistic. They've set it at around 78,000 crore. The current year number, the FY23 target is around 65,000 crore as against FY22, which is expected to be around 78,000 crore. Again, realistic, doable numbers is clearly the message here. And current year numbers is including the LIC, which should go public before 31st March. And moving ahead, what this means, the higher capex and lower disinvestment means that the fiscal deficit is gonna be around 6.9% current year and is pegged at 6.4% next year. So this is broadly, so what it means is, again, the government's focus is more on more on spending, more on capex, more fixed capital formation, as against trying to worry about the concerns around we getting a downgrade or getting the pressure from the rating agencies. So some of the key underlying message or the tone that I thought I would put across before I hand it over to my colleagues. The number one message clearly, just before I start on that, we have already put the link on the website on the chat box of our on the website link, where we have published the budget note. So feel free to open this note while we are doing this session and have a look at all the pages. We've actually gone ahead and put across our sense on the impact on various sectors. The first was the underlying tone was around the positioning India as a self-reliant preferred manufacturing destination and a den for startups. That's number one. Number two is preparing for the new urban India, right? The Gen Z, Gen Y, etc. That's where the big spend would be around. Third is building the new age connected India. We've spoken, and we'll listen more on this from my colleagues. Promoting the indigenous digital currency and putting some curbs on the other digital assets. Next is the areas around electric vehicles, green zones, the climate, net zero, the net zero carbon emission norms, and lastly around financial inclusion. So these are some of the areas which I thought were the hallmarks of the budget. I would now request my colleague Franklin to give you highlights on the sectors, and then we'll move to the Q&A section.
So if you see the BFSI sector, there have been certain key aspects where the government has focused on. First is they've tried to focus on the weaker sections. So the MSME sector and hospitality sector. These are the two segments which are still struggling and are deep in the doldrums. So even though our overall economy has actually bounced back very strongly, but these sectors are still struggling for obvious reasons. So if you see, for the MSME sector, the government has actually increased the credit. Now the government actually gives collateral-free credit to the MSME sector. So they have enhanced this by 2 lakh crores. So the outstanding loan itself for the MSME sector is somewhere around 30 lakh crores. So within that, a 2 lakh crore collateral-free loan given to the MSME sector speaks volumes, because it will go a long way in helping them in enhancing their loan book and in also covering up the lost ground. So that is one aspect. Secondly is the ECLGS scheme. Now the ECLGS scheme has been very successful. Till date, the outstanding amount of the ECLGS is 4.5 lakh crores, which were initially given to the MSME sector and post that it was given to the healthcare, hospitality sectors, which were also struggling. So in the current budget also, that 4.5 lakh crores has been increased to 5 lakh crores, and that incremental 50,000 crores has been given to the hospitality and the related sectors, which really need the support. So these are two very good, interesting things that the government has done in order to support the weaker sections of the economy. Next is the thrust on digital. We know that the government is very, very vocal about their focus on the digitization. So we have seen the onset of UPI in 2016, and that has really taken us to leaps and bounds. So continuing with that, like now the entire banking system is on core banking system. But so far, the post offices are not on core banking. So the government has tried to address that in this budget. So there are 1.5 crore post offices which will actually be under the core banking system. Now what this will do is, this will actually enable seamless interactions between the post offices and the banking system, which was not the case so far. So what people will be able to seamlessly transfer money via NEFT, RTGS through post offices and through the banking system. So this is particularly helpful for the rural economies, because the lot of post office schemes and all are being invested by people in the rural segments. So this is just enhancing the financial inclusion theme which the government has. In addition, they are also going to be creating a health repository. Now, what exactly is health repository? In this health repository, you will have all the details of the insurance companies. You will have also the details of the people who are related to who have taken the health insurance, and your entire health records will be digitized and will be showcased. So it will enhance and improve the prospects of a person taking health insurance. So if someone has your records of your entire health insurance, they will be more inclined towards giving you a health insurance in the future. So this is in terms of enhancing the insurance insurance penetration. So that is one scheme which the government has actually touched upon, and this will go a long way in terms of increasing the financialization of savings, the theme that we have seen in the past few years gaining traction. And the last thing which they have done on is for enhancing and strengthening the IBC. Now IBC, when it came in 2016, has had a deep impact on the corporate sector. We have seen a lot of resolutions that were happening. SR Steel, Bhushan Steel, just to name a few, have happened through the IBC route. And the recovery process via the IBC route has been the best in India. But so far, the IBC is only limited to domestic corporates. So what if there is an international insolvency that needs to be addressed? That is not taken care of in the IBC route. So government has expanded the scope of IBC right now to even include the foreign insolvency. So this will help a lot of our large banks, private sector banks and public sector banks who also have a sizable international presence. So these are the key impacting focus areas which the government has focused on for the BFSI sector.
Thank you, Randy. I'll now request Kimberly to.
So if we come to the consumption part of it, the government is actually focused on a more longer term view. So while there were no major announcements related to the tax cuts or increase in tax deductions, projects like the Gati Shakti and the higher capex allocation will actually help improve infra and connectivity, and in the longer run it will lead to more employment and better rural incomes. For example, even the PLI scheme is expected to provide around 6 million jobs over the next few years. So all these measures will help improve productivity over the longer term. But if we come to more specific announcements, so the government will be dispersing around 2.37 lakh crore of MSP payments to farmers directly this year. So this is the assured income that farmers will be getting this year, which will benefit a lot of sectors that derive a big portion of revenue from the rural sector. For example, FMCG companies get around 40% of revenue from the rural sector. So increase in incomes will boost consumption. The second is there's been a duty reduction on unpolished and cut diamonds. So this will actually help increase the demand for diamonds as well as improve the share of diamonds in jewelry players' revenue mix. So this will lead to better gross margins for them as well. And more importantly, there's been no tax hike on cigarettes and tobacco products this budget, which is positive because this sector is always under scrutiny in any budget. And in terms of customs duty, again, the basic custom duty on cocoa beans has been reduced from 30% to 15%, again benefiting players that are present in this segment. If you look at the agri segment, so again, the government has taken a lot of initiatives on the agri-tech side and initiatives to modernize the sector. So, for example, they will be implementing a 44,000 crore irrigation project, which will provide irrigation benefits to over 9 lakh hectares of farmland. They are also working on a scheme to improve the domestic oilseed production because India is very heavily reliant on imports of oilseeds. So almost 60% of our oilseeds are imported, which is why we are very volatile to international prices. So they have allocated around 1,500 crores to reduce this dependence on imports and increase the domestic production. Apart from this, there's a lot of focus on providing funding for agricultural and rural related startups. For this, they've set up a fund which will be implemented through NABARD. Then a lot of tech related initiatives related to Kisan loans being used to promote crop assessment and digitization of the land records. And lastly, there's a lot of focus on chemical and organic farming. So these are more longer term initiatives that are taken that will help promote the development and be beneficial for farmers in the long run. And lastly, there's been an additional excise duty of ₹2 on unblended fuel. So the government has been focusing on increasing the blend of ethanol with fuel, and they have a target of 20% mix by 2025. So clearly they continue to remain focused on that, and that is why they've increased the excise duty on unblended fuel by ₹2 per litre. So that would be some of the initiatives taken in the consumption and agriculture.
Thanks, Kimberly. Moving on to Lisa, if you could briefly touch upon the announcements towards the tech space.
Yeah, hi. So the budget was quite a futuristic one, with digitalization as a theme being pervasive throughout the budget. And what NASSCOM also said after the budget, that it sees a budget betting on technology, and this will shape the next decade, and that will help shape the next decade. It will be called as a techade, as in the decade of technology. So now coming to and also if we see on defense side, India is on its way to become self-sufficient in defense, and it's also lowering its imports from defense. So what they are doing is that 25% of the R&D towards defense is being focused on the advanced technologies. So this will positively benefit companies which are in the design-led space. So we have e-passports. So e-passports will be issued with embedded technologies and other futuristic technologies. So this will positively benefit companies which are in the in biometrics, AI, cloud, and all. Now coming to the telecom front, on the telecom front, what we have is that spectrum auction for IG rollout will be coming soon, and that will be by FY23. So and also PLI schemes will be extended for 5G equipment. So that's a positive for telecom companies and technology, because technology companies, because they have already started piloting for 5G services using the 5G trial auctions. Now the other two key noteworthy proposals in this budget was that the government will be coming out with its own digital currency, that is the digital rupee, which is the CBDC, and this will be done by FY23. Now this will give a big boost to the digital economy and also result in low cost of currency management, because it will avoid costs such as the printing cost and all. And the other one is taxing of the virtual digital assets at 30% flat without any deduction except the cost of acquisition. So there won't be deductions like brokerage cost or lawyer fees, etc. There won't be any carry forward, there won't be any set off from other income. And even the gifting of virtual digital assets will be taxed in the hands of the recipient. A TDS of 1% also will be proposed to be taxed from 1st July 22. So prima facie, this looks positive, as the heavy taxation on cryptocurrency will lead to a shift of investments to traditional modes, that is the equity, mutual funds, which are subjected to relatively lower taxation. So for now, we have to adopt a wait and watch approach, because there is still no clarity, as the government is still working on the draft on this crypto bill. So we have to wait and watch. Thank you.
Thanks, Lisa. People who are watching us, we would, whoever has any questions, feel free to drop in the questions in the drop box. We have a colleague, Pooja, who would take in, club those questions and pose it to us after we finish this. So please, anyone having any questions, please drop in that the chat box. Now we move to the pharma sector. Tami would take us through what were some of the announcements around the pharma, and more importantly the overall healthcare space.
Right. Starting with the direct tax segment, from a taxation standpoint, this budget was more or less a no negative budget. Tax rates and deduction slabs remain unchanged. An additional provision, however, has been introduced, which allows filing of updated returns within 2 years from the end of the relevant assessment year to declare any income that was missed out earlier. Surcharge on long-term capital gains arising on transfer of any type of assets has now been capped at 15%. For eligible startups to avail tax benefits, the period of incorporation has been extended by 1 year up to 31st of March 2023. This will further boost the startup economy in India. Additionally, a year's extension has also been given for newly incorporated manufacturing companies to start production and avail the concessional tax rate of 15%. This will encourage domestic production and also help to reduce the overall dependence on imports. Thank you.
Do you, around healthcare, you would have
Sure.
any allocations that have been cut or raised? You want to highlight anything?
Definitely. So around the healthcare budget, this year, you all might have noticed that the overall allocation to the healthcare budget has been reduced. However, a significant reduction can be seen due to the lower vaccination spends. Currently, over 75% of the Indian population is fully vaccinated, and hence, since we come nearer to the end of the COVID wave, this amount has now been reduced from 35,000 CR allocated last year to 5,000 CR this year, which is why there is a significant spend in the overall healthcare budget. This year, a total of 1.1 lakh crore has been allocated in the healthcare, including Ayush, support for vaccination, and your grants for health.
Thanks, Subhash sir. We now move to the second last announcement around automobiles and other related sectors. Over to you, Yash.
Yeah. So hi, I'll walk you through the major announcements in auto and chemical sector. So in automobile, to push electric vehicles penetration in India, government is coming up with battery swapping policy. So this policy will have uniform standards for batteries, and all the EV manufacturers or the brands have to follow the uniform policies for their batteries. So this will help to improve the penetration of EVs in India. At present, only Hero and Okinawa are allowing battery swapping, whereas your Ola Electric as well as the Ather Energy are not allowing battery swapping. So then we move to chemical. So chemical, there were no major announcements except some of the custom duty reductions in methanol and acetic acids. So this is positive for downstream players who are into the making of the process of the chemicals, and these are the intermediates which is being used. So as these chemicals are not being produced in India and majorly imported, so it will not have a major impact on the producers.
Thanks. And the last bit on the big important sector, infrastructure.
So infrastructure, we have seen a lot of focus, and that is likely so because the overall spending has increased from 5.5 lakhs, 7.5 lakh crores. Within that, you would have heard Gati Shakti very prominently being repeated many number of times. So if you see within that, while it touches upon a whole host of segments and sub-segments, but it largely focuses on roads. So if you see, they have a target of achieving 25,000 kilometers in this particular year, in the next financial year. Just compare it to what it did in the last financial year, it was only 13,000 crores. And prior to that, it was 10,000 crores. So the pace has been increasing, and they expect to increase that pace even faster. And that's why the higher allocation. So within that, if you see the Ministry of Roads and Transports, they have, their allocation stands at 2 lakh crores, which was 1,30,000 crores. So that's a sizable 70,000 crore increase. So that entirely goes towards spending onto the roads and highway segment. So that is one aspect. Secondly, we have also seen the indigenization of the defense. This time they expect 68% of the capital outlay to go for domestic companies. Last year this number was 58%. So while the overall capital outlay for defense has been increased by 12% to 1.5 lakh crores, while the overall number looks 12%, but if you look at the domestic procurement, that number, because of the share increasing, is up to 30%. So more and more domestic companies are likely to benefit from the defense budget. Thirdly, we also have focus on clean energy. So if you see the PLI scheme for solar, it was 4,500 crores last year, which has now been enhanced to 24,000 crores. So significant enhancement in PLI schemes for solar modules. So that entirely focuses on solar. That is one aspect. Second is government is going to come out with green bonds. Now government is going to, these are going to be backed by government, so where the interest rates will be very, very attractive. So green bonds are likely to be focused for pure renewable energies. And thirdly is your energy storage systems. They are being given the infrastructure status. If you get an infrastructure status, automatically your interest rates reduce. So and right now in our country we have a very strong thrust on solar, but the problem with solar is it is only available during the day and you need a storage mechanism for utilizing it during the night as well. So there is absence of storage systems in the country as of now. So this giving of infrastructure status to the energy storage systems will help build the storage units. So we will be able to use solar energy in a much more frequent manner. So that's one thing. Even in terms of waterways, the Jal Jeevan mission that has been given a strong focus. So the budget has given 60,000 crores, which was just 45,000 crores in the previous budget, and it was much lower at 10,000 crores. So very strong focus on building of the Jal Jeevan mission, which is for your improved water treatments. Railways has also been given a good focus. The budgetary allocation stands at 1.4 lakh crores, which was 1.2 lakh crores last year. If you see the trend, the railways has been continuously getting strong budgetary allocations. So we will see a strong focus in these areas. So all in all the segments of infrastructure have been touched upon very well and taken care of in a very strong manner.
Thanks, Franklin. So, to summarize, what the keywords I picked while my colleagues were describing their individual sectoral announcement was words like, PLI, data centers, the drone, the crypto regulation, clean energy, green energy, financial inclusion, etc., etc. Now, these are, and there was something around, I remember, animation and graphics as well. So these are things that the new India requires, while at the same time as I said, the impetus around developing infrastructure, housing and the water and associated areas continue. So essentially the background or the lens in which we used to review a budget document earlier has completely changed. As we see in this budget, we are no longer focusing on subsidies, the deficit going up, the allocations towards various schemes, including Manrega. All that is now not being so much focused, including this investment. It's believed that we are now, since we are amongst the top 5 economies in the world and heading towards the third, being the third over the next couple of years, the larger focus has to be on the new age sectors which I just mentioned, rather than trying to focus on what we've been doing for the last couple of decades. So that's where I stop. Thank you all my colleagues for that wonderful synopsis, and I would request a big thank you to our colleagues upfront, to our colleagues who've been working for the last couple of days trying to stitch this together very beautifully. So big thank you to Naveen, Rahi, and the entire team, and to Pooja, who as we requested the last minute to take up the questions. Can I request Naveen to put that poll question? We have a lot of poll questions, so we would request your participation. So how was the budget like? That's a question that we have. Was it good? Was it excellent? Was it not so good? We have a question around that which will just come on your screen now, and we would request your participation there. And if possible, we would also show you the results live. So if I could request Naveen to put across that question to the audience. Just coming on your screen in a couple of seconds, and then we will have many more such questions while we take up some of the questions around the chat box. In the meanwhile, I'm sure Pooja would be just going through the questions and trying to see what are some of the common questions that are there posed by our audience. The question is there. You guys can see it. I would request everyone to participate in that by clicking the relevant button. Maybe we'll wait for everyone to participate, and after that we'll section. We have almost around 200 votes, I guess. We'll wait for another 5 5 more seconds. It's a very easy stroke question, the most common question, and it also gives us what the audience is feeling about what they could understood and how it impacts them. So I would request Naveen to stop that question, the time for that. And Naveen, is it possible to show the results now? Okay, we'll see if we can show it later. So over to Pooja. Request her to. This is the first question which we would have from the audience. Yep. The results can be shown, Naveen. Okay, yeah, the results can be shown. I think it's already there on the screen. So that's what the results show. So I would now request Pooja to pose us the first question.
Thanks, Jaspreet. Here's the first question. I guess somewhere everyone had been waiting for some announcement around the digital space, especially the digital currency. Mr. Dinesh Kotecha has asked this question where he wants to get an answer that those who are dealing in cryptocurrency are losing because of around a 30% tax that has been levied. At the same time, the crypto has seen a crash also. How would this impact the equity market as a space?
So, yeah, that's a very expected question. Thanks, Mr. Dinesh, for that. So, I guess if you notice, while putting a tax on cryptos, the government at the same time has also given the signal that they may not end up banning that. Right? That's our hunch. Right? So, if there were two ways earlier, one was to completely ban it, which was obviously not the most desired. And on the other hand, the other expected thing was to let crypto work or govern the way it was, which was independent. There was no governing body. Both of which was not a desired outcome in any economy, including specifically in an economy like India. Right. So I guess with this taxation, the government has kind of de facto given the approval that it may be allowed, and obviously in the bill that they would launch formally in the parliament, there would be rules, micro rules governing, how they would like it to pan out. So I guess putting that levy 30% plus TDS plus you cannot offset it against any other income, etc., means that it will now be controlled. Our sense is some part of the equity will now get incrementally. I'm not saying whatever anyone has they will shift. But I'm saying incrementally, whatever money people may have wanted to put in crypto, because it was largely, it was tax-free only for people who were not declaring it. If you were declaring it as part of your other income, obviously it would have been taxed at the slab at which one would have fallen, the slab rate. But we know, and the government knows that people were not declaring it, and therefore it was almost going as tax-free. So going forward, I guess incrementally, a large part of that new money which could have gone to crypto would now come to is very likely to come towards equity. That's the clear message that we can derive from there. So I guess since it was high risk and high return, etc. That's and also not so regulated. That's why such a regulation, and it not only includes crypto. By the way, it involves all digital assets. So the NFTs and many more such currencies are also which are digitally coined would come under that ambit. You want to add anything, Lisa, to that?
Yes. So what I feel is that there was a lot of black money conversion happening, while buying these cryptocurrencies and all. So there was a lot of conversion of black money into white money, and that's what government wanted to stop. Because when these assets will be taxed, now these assets are mostly, they don't have any value, there is no underlying value to it. But by taxing that, you will be taxed in real currency, and then these enormously valued currencies, cryptocurrencies, that will end up having its real value. So all in all, it is actually a good action taken by the government.
And this is going to be effective next year. So, 1st April 2023, right?
Yes, from assessment year 23-24.
Yeah. So next year it's going to be applicable, while the TDS will also be applicable from 1st July 2022, right?
Yes, so this can be related to the art scam that happened, way back in the 90s also, when like arts, if there was a bureaucrat and his wife used to make paintings and sell these arts for enormous value. If she's selling it to an officer who wanted to take services from the bureaucrat, so even that came under the capital gains. Eventually, even that was taxed under. But then we still have arts, right? We still have paintings and also likewise, it's the same for cryptocurrencies and other virtual assets.
Thank you, Lisa. Next question, Pooja.
Yes, I'm going to club this question. It's come from Mr. Pradeep Saha. I have one from Mr. Pathan as well. So basically they've gone about asking what is the impact of the budget going to be on the banking sector, as well as the new announcement pertaining to the digital currency which will be introduced by RBI. How will that impact the banks?
Oh, so I request Franklin to take this up and maybe briefly, because this is a topic on which I am sure he can talk for an hour. So yeah, over to you, Franklin, for a quick brief reply.
So basically, banking sector is reliant on credit growth, right? So credit growth is the ultimate underlying theme with the banking sector runs on. So the higher fiscal deficit, if you look at the history, whenever there have been periods of high fiscal deficit, that has led to high credit growth. So that has always been positive for the banking sector. That is point number one. Secondly is the quality of the spending. So now if you look at the capex as a percentage of the total expenditure, if you look at the history, like for the last 10 years, the capex as a percentage of total expenditure used to be 15%, and that number had been gradually moving downwards. Just prior to the pandemic, if you see, that number was at 12% of the total expenses. But during the pandemic, the government revised this number upwards. So while the fiscal deficit overall had gone up to 9.2% in the last year, the percentage of capex as a percentage of the total expenses, that also moved up to over 15%. And that was a turning point, because that was the first time where capex as a percentage of expenses moved back after moving downwards. And we have seen the last 3 budgets, the capex as a percentage has only been above 15%. In fact, this budget, if you see the capex as a percentage of total expenditure, that number is at 19%. So when you invest into quality segments wherein you spend today for the better of tomorrow, that always has a positive bearing on the banking sector. So in that sense, banking sector is one of the biggest beneficiaries of the budget. That is point number one. Point number 2 is on the digital currency. So the digital currency right now is basically, if you see what the RBI has said is, they normally in their balance sheet have currency in the form of physical form. So now when the digital currency comes into picture, the RBI will have an allocation for the digital part as well. So you will have a physical currency which can be converted to a digital currency as well. So everything that RBI announces or issues, you would know, has to be present on their balance sheet. So digital currency is one form which will get added to the physical currency. And the benefit of the digital currency will be that RBI will be able to float it and transfer it without having much of paperwork. In the physical currency, you would realize that there is a lot of paperwork involved. The notes have to be printed, the notes have to be sent out. So there is a lot of possibility of black money also getting formed because of the physical form. Now when you have things in the digital form, it will be easier for the RBI to track, and it will be easily monitored as well, and it will be you will be able to make a smooth movement also. So that is the benefit that digital currency is going to have over the entire banking system.
Thank you, Franklin. If there were any questions around our Hindi audience, please let us know, Pooja, and we'll try our best to impress you with our Hindi.
I'll do that. So the next question comes in from Mr. Nitin. He is asking that what are your views for the new age companies? They have been falling rapidly globally, and would it be a right time to go about investing a small portion of it in our portfolio?
So let me just request Kimberly to take it up, and then I'll kind of summarize or conclude that.
Right. So you're right in saying that this has been happening globally as well, and then the same followed in India, where we've seen a correction in most of these new age tech companies. So as you know, it has nothing to do with the companies specifically. They remain strong. The growth story remains the same. It's just that with the Fed signaling a rise in interest rates, that has also led to scrutiny around that has also led to an increase in the bond yields, and the companies that were highly valued have been have come under scrutiny, and that's why these tech companies, people have been diverting their funds to more safer assets. But of course, the fact that they've corrected also provides a better entry point in these companies, and the fact remains strong that the future is digital, and there's nothing that has specifically gone wrong with the fundamentals of any of these companies, and they continue to address a very large addressable market in each of their respective spaces. So it again remains a very hot space, and with the correction, one can definitely look at a good company where they see the growth story intact for the long term.
So just to translate that, globally world over क्या हुआ है कि US Fed ने अब बोला है कि जाके interest rates बढ़ाने का direction लेंगे rather than उसको status को रखें या उसको नीचे गिराएं. Plus balance sheet अब जितनी है globally अब उनका focus उसको टाइटन करने का रहेगा, विच मीन्स कि वो ज़्यादा प्रिंटिंग ऑफ मनी को बहुत कंट्रोल रखेंगे, कम रखेंगे कंपेयर टू जो पहले हो रहा था. दोनों को अगर हम मिला दें, बैलेंस शीट को उतना इजी नहीं रखेंगे और इंटरेस्ट रेट्स ऊपर जाएंगे, उसका मतलब है कि ग्लोबली इंटरेस्ट रेट्स ऊपर जाएंगे. इसका मतलब है कि जो हाई ग्रोथ सेक्टर्स है इंक्लूडिंग डिजिटल स्टॉक्स, द टेक स्टॉक्स, उस पर उनका जो डिस्काउंटिंग रेट है वो बढ़ जाएगा, और देयरफॉर उससे उनके जो वैल्यूएशंस हैं, जो फेयर प्राइस निकलता है, वो काफ़ी गिर जाएगा. यही हुआ है यूएस में और काफ़ी यूरोप एंड चाइना, जापान में. वहाँ पे आप बड़ी सी बड़ी कंपनी देखें, वो भी 30-40-50% डाउन है. समथिंग लाइक एज बिग एज नेटफ्लिक्स आई थिंक इज डाउन 40% इन मंथ. सो बहुत सारे बड़े बड़े नाम नीचे, इंक्लूडिंग इंडिया में भी आप देखिए तो जितने सारे टेक डिजिटल स्टॉक्स हैं, कोई 10% डाउन है, कोई 20%, कोई 40-50%. ओवरऑल स्पेस पे हम बहुत पॉजिटिव हैं. हमने इस पे ऑलरेडी इस स्पेस पे बहुत रिसर्च किया है, और हमने अराउंड दिस थीम 2 वीडियोस भी अपने यूट्यूब पे पब्लिश किए थे. किम्बर्ली ने पब्लिश किए थे यूट्यूब पे, तो आई वुड रिक्वेस्ट एवरीवन टू गो थ्रू दैट. That was around digitalization and that was around digitalization, और मैंने एक emerging themes के अंदर tech platforms एक theme cover किया था, तो I would request you to go through that. Also एक बहुत नई technology stroke area है जहाँ पे there is a lot of development to be seen. बहुत काम होना है उधर, which is called metaverse. Again we have done a very fair and very detailed work. रिसेंटली हमने अबाउट 15-20 डेज बैक हमने वो वीडियो अपलोड किया है यूट्यूब पे फॉर ऑल आवर ऑडियंस. लीजा फर्नांडिस, शी हैज डन अ वंडरफुल जॉब पुटिंग अक्रॉस द कंटेंट and the how it will look like, very ably supported by our back-end content designing team, Chandramani and Sohail. So a big thank you to them. So I think space में बहुत interest रहेगा, which is the tech and digital space, and आप कह सकते हैं select buying and buy on dips. अगर ये 2 चीजें अगर आप करेंगे, so there is no reason to worry, and multi-year multi growth opportunities जरूर देखने को मिलेंगी. The next question.
Yes, the next question comes from Mr. Nitin. He is asking that will the budget give the required boost to the economy, because in the recent times we have seen the FIIs, that is the foreign institutional investors, selling, be it in the cash market as well to an extent in the derivatives segment. And how will this lead to the impact of the budget, budget impact on it?
So the question is around
FIIs.
what signal do we take basis the huge FI selling in the last couple of months?
Yes.
Okay, so what I would want to reply to that is the FIs are typically a lot of FIs are typically not long only, right? There are very few long. Long only means आज ले लिया एक साल तक वो touch नहीं करेंगे, right? That what long only means. Then you have position based FIs जो 4-6 महीने का view के हिसाब से invest करते हैं, right? Which is the next big category. And the biggest category is the hedgy stroke which take short term views, right? A view could be month, 2 months, or as low as a couple of weeks, right? तो उनके buying और selling, and this is very different from the FDI stroke FPI stroke also the VC और private equity money जो वो लोग डालते हैं वो 2-3-4 साल के हिसाब से डालते हैं, right? वो unfortunately इतना ज़्यादा notice में नहीं आता because private equity money इतनी आई है इंडिया में, it's humongous, right? But only FII buying selling notice आती है daily because वो declare होती है openly. तो बहुत ज़्यादा हमें इस पे focus नहीं देना है, as I said, because उनका mandate अलग है. Second now the role of domestic institutions and in particular retail HNI has become so huge that it has आप daily देख लीजिए the DI buying is almost equal or maybe 60-70% of that of the FI amount. अगर daily का FI selling is around, let's say any day is around 5,000 crore, तो जो DI buying उस दिन सामने है वो between 3 and 4,000 crore होती है. So to that extent it gets nullified and support मिलता है. And this by the way doesn't include retail HNI because that is a separate medium altogether. So no need to worry. The new age, the next big driver for the Indian equity markets is people like you, me, and crore of those 7 crore Indians who have opened the demat accounts, and including like the 4 crores who opened in the last 2 years. So that's the people, that's the audience which is driving this the liquidity on a daily basis and will drive the direction. The role of FI has already gone down significantly. Our senses will go down even further going ahead. So no need to give as much importance to FI flows as we used to give them 10 years or 20 years back. Yes.
The next question, Jaspreet, again this has come from a number of people on the chat, that how will the 15% long-term capital gain surcharge impact them as an investor?
So 15% surcharge, I'll request Tanvi to pitch in later. So largely there were anomalies. There were assets on which the surcharge was 20%, some were 30%, some were 40%. Right, while there were assets on which the surcharge was around 15%, including personal taxation. So I think this anomaly has been corrected, and the FMS said that all surcharges on long-term capital gains will be capped at 15%. That's the larger message there. Tanvi, if you have anything to add there.
Right, rightly said. The surcharge for different segments used to be different earlier. In order to streamline the entire process, the surcharge has now been capped at 15%. However, I would like to say that the long-term capital gain for equity still remains at 10%, which still means that equity is a more preferred asset class in the long-term perspective.
We can take the next one, Pooja.
Yes. The next question is pertaining to the sectors which are again repetitive. It's coming that what will the impact of the budget be on one, the FMCG sector, and two, the IT space?
Okay, I'll request the two ladies to take that up.
I'll start with the FMCG sector. So there was a lot of news on how there hasn't been many announcements related to reviving immediate consumption or higher subsidy benefits allocated. But like I said earlier, the focus is more on a long-term strategy here, which is why the higher allocation to infra and irrigation and even the focus on agri-tech initiatives. The government has got a lot on organic and chemical farming and tech initiatives in the agricultural sector. So they're trying to bring the farmers up to date in terms of modernizing the whole sector. So again, here they've taken a very futuristic view. So all these initiatives should help improve the whole rural scenario in the longer term. So there may not be immediate benefits to the FMCG sector, but in the longer term, it should benefit them. And also, like I said, the inflation has been a major concern in the FMCG sector, with edible oil also peaking out with its inflation. So the government has taken steps to increase the domestic production of oilseeds, and that will also help reduce imports of oilseeds. So there are more long-term initiatives on the FMCG's front, and we can see that playing out over the next few years.
Lisa?
Yeah, so if we see the budget, it was a digitalized themed budget, and even government has recognized that to bring India to a 10 trillion economy, we have to bring a touch of technology in every spheres, like in agri-tech, in ed-tech, everything. So even in defense, so the engineering companies also, they are also going to benefit from this engineering. I'm talking about the engineering technology, which will benefit through blockchain and embedded technology. Even the digital currency that government is coming out will use the blockchain technology, and that will greatly benefit the companies which are into blockchain technologies. Yes, thank you.
I'll request Naveen to put the next question on the poll. Is any question around the personal tax rate? I think there were questions around personal tax rate. So we have a question around that. If we get that, and then just coming on your screen in the next couple of seconds. I would request everyone to just tap in their answers, what they feel about that question. In the meantime, I'll request Pooja to check on the next common question.
Yes. The next question is pertaining to the pharma sector, that yes, in the recent times we have seen a good enough correction in the pharma sector. What will be the future for the pharma sector in the year to come?
Yeah, so pharma and IT are definitely the two big sectors that have kind of made a comeback ever since COVID struck, and for right reasons. And now India is making its presence felt globally, including it always was a dominant force in IT, and was a very close second or a third or maybe fourth, fifth in many other segments within pharma, and now it's trying to make take action so as to move up ahead. So our sense is pharma and chemicals, allied chemicals, will definitely be amongst the leading sectors, given the way we have developed capabilities to both on the engineering R&D side as well as on the manufacturing capabilities side, where we have the capability to source critical raw material and produce a final good and export it to the developed nations as well as developing nations. So we remain fairly positive on both pharma and specialty chemicals as a space. Yeah. So I guess the poll question is on your screen. Our audience, if you could just plug in your inputs. It's around the tax slabs. Whether what's the sense if they remain unchanged? What's your sense? So Naveen, you can just, the moment we have adequate response, you can close that and look up for the next question, which we will come on your screen after 5 minutes. In the meanwhile, ladies and gentlemen, we would Naveen will be request Naveen to just put our website details on the chat box, our customer service email ID and the contact number. Anyone who has any questions which we couldn't answer today, feel free to write to us. Or if you would like to know more about the services, the website is is fairly descriptive, so feel free to go through it, all our products and services. Still, if anyone has any questions, he or she can write to us on the email ID that Naveen is dropping in the chat box now, or call us on the number that he's putting there. Would request Pooja to take up the next question.
Yes, just please. So the next question is pertaining to something which has been very much in the last few quarters, that is relating to the EVs. They have gone about asking the impact of EVs on the budget because of the budget, as well as the defense sector, what impact it holds on the budget. To club that question, there is another question as well, that today if the manufacturers of electric vehicle batteries are the ones who are going to be the next players, what about the old players like Exide and Amar Raja batteries? Will they get impacted in terms of their profitability or sales?
Again, a very expected question, and I'm sure again Yash would have an answer which could be he's very passionate about the subject. So over to you, Yash, for trying your best in being brief and still giving out your best answer.
Yeah, so of course EVs were not neglected in this budget. So the main problem with EVs is that in India we have a lot of issues with the charging infrastructure. That is why the person is afraid to buy an electric vehicle. So looking at this issue, government is looking to come up with a swapping policy. So what will help this? So an EV player can swap its battery and he has not to wait to charge the entire battery. So this saves a lot of time for a person who is going to ride an EV. So with this move, of course the charging infrastructure will take its own time to set up. By that time, a lot of private investments and the players would come in and set up this battery swapping network, and this will help to ride an EV very smoothly on the roads. Coming to the existing players such as Exide and Amara Raja, so of course these are the existing ICE engine battery manufacturers. So Amara Raja has already came out with a plan that they would be setting up a plant for manufacturing batteries which would be used in EVs, and of course Exide is also following the same. But how this will span out for the companies, we will have to wait for a couple of years.
Yeah, so just to summarize, EV is the future for sure. No taking away from that fact, and it's going to make a big dent to the existing industry, and new companies, new technologies is emerging. For people who would like to know more, I would request them to look through our again, one of the videos we put on YouTube, emerging themes for the next decade, part 1. We've covered this. One of the themes we've covered is EV. So you will get a fair idea what our sense and how positive we are on that space. And mind you, just some of the stocks that you are asking, or we are maybe using it is please use it as a educational information illustration and not any recommendation. And also, for EVs, it's not necessary that you have to buy a EV manufacturer. There are so many industries which are like a battery or an auto ancillary, even a metal player, even a specialty chemical company whose product is going into making into the battery manufacturing, which is going into an automobile. So you don't know how many ways there are ways it's possible to play the EV theme. So whenever we discuss with our clients or with our overall audience, please do not feel that I do not have a Bajaj or a Hero or a TVS or the new age stocks which are tech stroke other stocks which have a EV focused revenue stream. That's the end. There are so many other opportunities available which are equally attractive. So yeah, that's our sense. Moving on to the next question.
So the next question is relating to the poll that we recently posted as well, that with the tax slabs remaining unchanged, how will it impact the individual?
The tax rate unchanged.
So there are a number of places where people have asked about the impact of it.
I guess I'll request Franklin to take it up.
Yeah. So if you just look at the number of individual taxpayers, they are about 8.5 crores. Compare that to the population, which is 138 crores, it's barely like about 5 or 6%. Even if you look at the working population, which is roughly 50% of the total population, that number is somewhere around 12-13% odd. So the point I'm making is the taxpayers are very small as of now in compared to the total population, and the taxpayers are representative of the formal economy. Large part of the taxpayers are part of the formal economy. Now what has happened in this pandemic is the formal economy has gone very strong and the informal economy has been very weak. We have seen it in various forms. So that polarity has increased, and that's not only the case in India, that's been over the world as well. So now what the government is trying to do is it's trying to reduce that polarity. So it has to somehow bring the people who are in the informal sector a bit up to pace in comparison to the formalized economy. So while the people in the formal economy have not got any tax breaks, you should not be too disheartened because the government has not tried to take away much from us. And you have to look at the government as a child, as a parent who has many children. For simplicity, let's assume the government has 2 children. One child is doing very well and one child is struggling. So who would the government try to support? It obviously would kind of try and support the one who is struggling and not try and support the one who is not struggling. Now why do I say that taxpayers are the ones in the segment who are not struggling is because if you look at the gross tax revenues for the 9 months, they have far exceeded the expectations. Now the overall tax income is expected to grow at 24% for this year. We are likely to exceed that number of 24%, and that is largely because of the income taxes and personal taxes which are paying huge dividends. So when the government is already realizing that this segment is anyways doing well, we are getting a lot of income from that segment, it doesn't feel the need to provide additional support to that particular segment. Hence they have thought, let's give it a miss for this year and let's see at a different point in time, because there are segments and sectors which are still struggling from the pandemic who need much more support. So that is.
Thanks, Franklin. The next question is that with removal of the anti-dumping duty from the steel sector, will this lead to an encouragement of the imports increasing from China?
I guess it's on a specific steel, request Yash to take it up.
So the ADD and CVD has been revoked. This is specifically on the stainless steel. So it's not on the all types of steel products, it is only stainless steel flat products. So it will not impact as the entire steel industry, but yes, it will have an impact for certain players who are mainly into stainless steel and flat products.
I request Naveen to launch the next question on the chat box around the EV penetration and battery swapping. In the meantime, request Pooja to take up the next question.
The next question is around the real estate sector that we have not seen it perform in the past few years. Can we see some improvement in this sector going forward?
So there was an announcement around that. Maybe Yash can start with that and I'll conclude it on it.
So for real estate, for housing basically, so government has allocated 48,000 crores for PMAI, that is Pradhan Mantri Awas Yojana. So they would be building somewhat 80 lakh homes into affordable housing category. Apart from this, if you see, real estate sector is doing much well because due to certain stamp duty reductions which were given at the time of COVID in certain states, and that is a key reason. Apart from this, also real estate sector is getting a boom due to the low interest rates at the decade. And also if we are seeing the jobs have improved, the job sector is also doing very well, and this is also leading to boost the real estate sector. We expect real estate sector to do well for next 2 to 3 years, and we remain positive on the same.
So just to conclude and add to that, so the multi-year low interest rates, never before, at least I haven't seen since 3 decades now. We're getting home loan as low as 6.4%. Which makes it so much affordable. The housing prices have not gone anywhere in most cities. in some cities maybe 3 years, some cities 5, 6, maybe 8 years in a space like NCR. The fact that incomes are growing and we are almost out of COVID now. The fact that now there is this urge to because of work from home, because we spend so much time at home, we need to have that extra room, maybe an extra flat and a house, and we would want to have our own space. For all these reasons combined, and obviously the big factor, supply is limited, because after the regulation had come in, the number of builders have gone down drastically across cities. So as much as 70% in a city or in a region like NCR, the number of builders which were there earlier, and now it's gone down by as much as 70%. Put all these things together, it's a multi-year, it's a cycle which has come back after 2007, 2008, and looks to be staying there. And mind you don't need to play or invest only in real estate direct stocks. There are so many ancillary areas like paints and electricals and building materials, through which this can be looked at. Because real estate, again, you don't have maybe more than half a dozen names on which you can trust, take that bet, and obviously valuation also has possibly in some cases gone very high. So yeah, that's our sense on the real estate space. Yeah, I guess on the whole question, I guess it was, yeah, we've everyone's replied, and we'll come back to you on the last whole question in a couple of minutes. Request Pooja take up the next question. We'll take the last 10 minutes more, and I guess we'll be able to wrap up most of it. And as I said, if there is any more questions left, I'm more than happy to answer it separately if you could write in the email, we'll be happy to answer it. And any other queries, information about our services, you can call us or write to us on that email, which is you can see on the chat box.
Alright, the next question is that based on the current budget, which are the sectors that one would recommend to most focus on from a year or two's perspective, as well as from a 4 to 5 years perspective?
So to answer to all our esteemed clients as well as the audience who's
I would repeat the earlier question, that based on the current budget, which are the sectors that we would recommend from maybe a 1 or 2 year perspective, as well as from a longer term perspective, which would be somewhere around 4 to 5 years?
Okay, so we have this approach where we look at, we call it the 3 bucket approach, where we look at certain stocks and sectors and club it under the SG category, which means structural growth. Where we take a 3 to 5 year view. Certain sectors we club under the MO, momentum opportunity, and we club it as we look at it from a 1 to 3 year view. And the third bucket is from a special opportunity SO, where we look at stocks with a 1 year view. So clearly from a 1 year view, the spaces which seem to be gaining or over the next basis the budget and the impetus. Would be cement, the building materials, housing, real estate, as well as metal and commodities. 3 year perspective, or maybe slightly longer, would be again the chemicals, pharma, IT, because again the also BFSI, the fact that, as Franklin mentioned, the credit growth has been very low, underpenetrated. There's so much happening in the space. New avenues of growth are emerging for old established banks, which are now going digital in a big way. So I would say consumer discretionary, both semi and ultra, and as well as BFSI and pharma and IT we would have a very constructive, positive view from a 2 to 3 year. 2 to 3 year perspective. Again, to all our clients, any stock you would have in 5 and 5, if it requires a serious rebalancing, we would definitely come back to you. But since we have a very diversified and a fair representation of most of the sectors, it doesn't seem like that there is a quick need to reshuffle the portfolio immediately one day after the budget. So be rest assured that whatever stocks you are holding would still have merit, and we wouldn't just want to flip it in favor of something which has just got benefited basis yesterday's announcement. So be assured that if there is any readjustment, rebalancing required, we'll come back to you in the immediate future.
Thanks, Jaspreet. That just answered the next question which I was going to post across to you, which was relating to that with the budget, are there any recommendations that we would be reviewing and exiting accordingly? Moving to the next question, that when it comes to maybe small caps, do we expect that we will be able to see a growth around 20% in the small cap sector with the current budget that has been announced?
Sorry, what's that 20%?
Growth in small cap sector.
Okay, so I guess small and mid caps were the darlings in 2021. They outperformed big time. If I remember correctly, Nifty went up, calendar year I'm talking about, last calendar year, Nifty went up 25-26%. The mid cap index went up more than 40%, small cap index went up more than 50%. That was the kind of outperformance. Doesn't happen too many years. Right, it happened in 2016, happened in 2017, and then came Jan 18, and everything came downhill. After a gap of 4 years, again 2021 was that big year. Our sense is mid and small cap, we continue to remain positive. In select portfolios, we have up to 40% exposure combined, mid and small caps. In certain portfolios, we recommend 50%, but in a very aggressive portfolio we would have as much as 60%. But we would not advocate having more than 60% mid and small cap exposure unless and until that particular individual feels that he or she has the risk appetite, has the tenure, has that mentality, can take up the volatility that can come in a small cap. In that case, one can obviously go ahead and increase it to as much as 80%. But yeah. That would be the broader, including on valuations. Currently, the small and mid caps is again stretching on the boundary, and there are now increasingly, limited opportunities left where one can go and dip and look at opportunities. So I guess this year again the outperformance will be there, calendar year, but not to the same extent as it was there last year. So one has to be very careful. One small correction what we have noticed in December and the recent correction which was there about 2 weeks back, the mid and small cap had taken a knock far higher than the respective the benchmark indices. Yeah, the next.
All right. The next question is relating to commodities. That what will the impact on commodities be with the recent announcement by the Fed in the Fed meeting, pertaining to the tapering as well as the interest rate hikes that are expected to come our way?
Yeah, so there are multiple. So this is a very relevant question. So there are one is around the Fed tapering and the interest rate hikes, and one is also around the way China is opening up. China has so far been very controlled on the production environment norms, etc. And now the expectation is over a period after the Feb first week or second week, once the Winter Olympics are done, they may open up in terms of the production curves that they have set in. But overall, our sense is that commodities will remain in a multi, I wouldn't say multi-year, but maybe a multi-quarter run. However, the current weakness limited uptick that one has seen in the last 2 quarters, which was quite different from the upswing that was there earlier, is very stark. But having said that, our sense is, given limited supply and very new supply is coming in, while the demand is increasing, there is a very good chance that it will continue. The commodity bull run will continue for a couple of more quarters, at least for the current calendar year. before it takes a meaningful pause. Even now it's taking a pause, but it's not as meaningful. Next calendar year and thereafter it might take a meaningful pause. So next 2 to 6 quarters I would remain optimistic, hopeful, positive on commodities, and I'm not saying all, but select commodities. So for example, aluminium, steel and copper would obviously be the top 3 out there.
The next question is that there is a provision of 60,000 crores in the Jai Shakti mission of the door-to-door water supply. How will this impact the private sector?
I'll request Franklin to take this.
Yeah, so the Jal Shakti mission which is there, we have seen 60,000 crores being budgeted this year. Last year it was 45,000 crores, and prior to that it was much lower at about 10,000 odd crores. So this increased allocation is likely to benefit the private sector in a big way, because when the government starts issuing tenders, they will utilize this amount for issuing these tenders, and this is largely going to benefit the irrigation projects, water projects, and also pipe companies. So that is how it is going to play. Government will issue tenders and it will utilize the 60,000 odd crores for issuing these tenders, and the private companies are going to come forward and actually participate in these tenders.
Yeah, we'll just take the second last question, then we move to the poll and wind up. Just before that, before we forget, we're doing a live session on the upcoming Manyavar IPO, and more than happy to have you back with. We've done a great session which is already available on a detailed deep dive analysis on the company financials, what's our sense of the industry, etc. It's already there on YouTube. It was done by Kimberly. So who wants to have a detailed view or an understanding of the business model, please go through it. And since the IPO dates are announced along with the price band, we would be happy to take up questions around that on Monday. So, and whoever is interested, Monday during the afternoon or the evening, we will be back live on YouTube to discuss our views on Manyavar. Over to Pooja for the next question.
The next question is that can we see growth stocks moving up at a similar pace, or value stocks will gain pace moving forward?
Value versus growth. I guess there's enough on social media on this topic. I guess growth had dominated most part. The early part of 2020 was value, and slowly the latter part, I'm talking calendar year, moved to growth, and that continued in 2021 right up till November, before Fed came out and said it would no longer be in that expansionary mode, and right up till recently, when it said instead of maybe a 3 hike, we might look at as much as a 4 hikes in the next calendar year. So I guess focus is now again back to value. Our sense is that one should have an optimum or a fair representation of both growth and value. However, we would be in the camp which would have a lion's share oriented towards growth stocks, so maybe 60 to 70%, while maybe as low as 20 and as close to 30% could be towards value. And see, value could be very, very different for different people. So some people would define value only as PSU stocks, power utilities, infrastructure, etc. While certain people might also look at select large cap pharma or a large cap IT or select names in the banking and other names also around value. So including automobiles, because that's also offering has not done as much as the other sectors. So it depends, but a larger message is that a fair mix of both growth and value is required, and we would advocate while having a lion's share towards growth oriented stocks, because that's where the big delta will come in. Obviously, if you're investing in Indian equity, you need to have that big delta, otherwise value may not take the portfolio up beyond a point. Yeah, the last question, Pooja, if I could request you.
Sure.
And then we'll take the last poll question and we'll try and wind up.
Absolutely. This comes from Mr. Anshu. He's asking that please confirm your views on high inflation and Brent crude moving towards 100. Can this impact the overall stock market's behavior?
So Brent crude going up and the interest rates going up. Sorry, the
Interest
impact
rates
on.
going high inflation and Brent crude moving towards 100.
I request Franklin to take it up, and before that, if we could request Naveen to put in our last poll question so that we. And it's a very interesting question, which around announcement in the budget around crypto. So it's already live on your screen now. And over to Franklin on that question.
Yeah. So if you look at the crude, Brent crude, it tends to outperform on either sides. It has excesses in the short term, but over a long term period, it kind of moderates. So if you look at crude oil prices, even in 2009, they had touched $140 per barrel, and just during the pandemic, it briefly went into negative territory. So even though today we are at $100, it's because the economy is opening up and a lot of pent-up demand is there in the system, not only in India but worldwide. So as and when this pent-up demand kind of starts, getting normalized, you would see the crude oil prices also normalizing. Just to give you an example, if you see IMF's projections for the world economy, it is pegging world economy to grow at 4.2% for the next year. This is versus 5.8% for the current year. So the world economy itself is also slightly expected to normalize compared to the current year. And all these bearings, all these things will have some impact on crude oil prices. So while we are currently seeing crude oil prices, touching $100, I don't think there's too much cause for concern, because they tend to overshoot and undershoot in the near term. But over a longer period of times, I'm sure these things will normalize.
Alright, thanks Franklin. We thank everyone for their participation in being a wonderful audience for today's live session on YouTube. However, for some reason, if your questions have gone unanswered, please feel to drop us an email and we will try to answer as many questions as possible. Do come back on Monday and join us for the Manyavar live session, and we also would love to thank our research team, that is Jaspreet and the entire team, for making this budget analysis very interesting and easier for our entire audience to understand. Thank you so much.
A pleasure, Pooja. Thank you so much, and a big thank you to all our members, the research team, research colleagues, and more specifically Naveen, Rahi, and the team at the back end who worked so hard to put this together for us. And as we just said, look forward to meeting you guys again on the Monday, 4:30 p.m. for the live session on the Manyavar video. Thank you once again, and happy investing.